It's Greg Mikulowski from this is the Midday Forex Commentary Report brought to you by FXDD. Let's take a look at the dollar versus yen here. We've had a very volatile move up and down, up and down, up and down here in the currency pair, up, down, up, down. The market has maintained its resistance against the 200-hour moving average at 93.46. Currently, we're back below the 100-hour moving average at 93.21. Currently trading at 93.13. The market has been able to hold support against the old trend line here. This trend line was made by 1, 2, 3, 4, 5 different lines here. Market broke above that level, and yesterday we came below that trend line without much problem on the sharp sell-off. But today we are able to hold that level on a couple of different occasions here. One, more or less, two, right here. So this is going to increase the importance of this bottom side of this trend line as it kind of makes another channel here at a higher level for the dollar versus yen. But nevertheless, it looks a little bit down channel here off of the highs that we saw here at the 50% retracement here at 93.67. So what do we stand for this afternoon? Well, we're going to be watching this blue line right here. Again, this blue line is 100-hour moving average at 93.21. If the market's able to get through that level, I wouldn't be surprised if we head up to 93.47. That's just been the way it's been going here today for the currency pair. On the downside, if the level holds, then look for a move back down toward 92.86 here for the currency pair, which is where this old trend line comes in on the downside. Let's take a look at the granddaddy of all, the euro versus US dollar. I'm going to take a look at the 5-minute chart here. And if you take the high from yesterday to the low from here today, 38.2% retracement comes in 135.81. The high reached 135.84, and the market then came off rather quickly. This happened at 11 o'clock fixing, which oftentimes can lead to some moves to the upside and then liquidations afterwards, and that may have been the case here as the euro sold off back down toward support at the 135.37 level. What's the significance of 135.37? I'm going to go to the daily chart and show you that. If you take a look, I'm going to draw a line. Oops, I didn't want that one. I'm going to draw a I'm going to shade in this area right here at 135.37. You can see a low here. It was a low here, low here, low here, low here. Held support here before falling down below, and then became resistance. Came resistance here 2 days ago. So that level is going to be a significant level for us as we head into the afternoon. Currently, the market is trading around the 44 level. We'll be watching that 37 level, see if we can find support. If we can't hold support, look for the market to move down toward this old channel trend line at 134.79. Also of note is this gap here. This gap across from Friday's close comes in around the 134.94 level. That's going to be a key level for the currency pair as well. So good support down there, down below at that level. Not to mention off the hourly chart, we also have the 200-hour moving average and the 50% retracement of the move up from this low to this high comes in at the 187.11. So 87 to 94 is a key support level for the euro versus US dollar. We'll be watching that level very closely. Let's go to the sterling versus US dollar. We'll take a look at a 5-minute chart in that currency pair. And this has a nice V in one of these V formations that we've been seeing of late in the sterling versus US dollar when the market came up and actually moved above what I thought would be the top side type resistance area, and around this area right in here. 98 level, 90 to 98 level, the market moved up to a high of 155.10, but you can see it left a big gap, tail up there at the top. The market quickly came off. We're currently below the 200-hour bar moving average in this 5-minute chart, which currently comes in around the 154.72 level. If you're inclined to sell, look for support down here at the 50 level, also down at the 46.47 level where the 100 bar moving average in the 5-minute chart is currently located. That would be the target on the downside for as we head into the afternoon. If the market is able to get above this blue line, then we should see further momentum up toward the 90 to 98 level in the currency pair for the sterling versus US dollar. I'll take a look at the dollar Swiss. We'll take a look at the hourly chart here, and this currency pair had a sharp move to the upside. We stopped at the ceiling here, though. However, that ceiling comes in at the 106.13 level. The market was able to hold that level at this point right here during the day, and came back down. We moved below the 100-hour moving average to 105.70 level, but the market has since moved higher as the euro dollar came off, as the dollar got stronger again, and this has pushed the market back higher. We still have to get through the 106.13 level. If we're able to get through that level, then the market's going to start focusing on this gap from Friday to Monday, which comes up at the 106.55 level. Interim resistance comes against the 200-hour moving average at the 106.40 level on the way to the upside, but we still need to get through the 106.13 level in the dollar versus Swiss in order to satisfy that move. And right now, every time the market goes up there, it seems to find resistance at the top side there. Finally, we'll take a look at the dollar versus Canada here, and the reason why we're looking at this is we're went up just above that par 09 level. That par 09 level was has been again, I'm going to draw a shade in this area here, and you can see as you go along from left to right how the market found support a number of different times at that area. The market moved up, but we did and got above that level, but we did run into resistance against the dreaded 100-hour moving average just above at par 16 level. Also, the 200-hour moving average is at par 20. So it was not just a case of par 09, but it was a case of par 09 to par 20 that has kept the dollar Canada a little bit offer, and we're currently trading at par 05, looking like we're finding some sellers in that currency pair once again. But the market is consolidating here down at the lows at lower levels for the dollar versus Canada. That takes care of my midday report. We do have a webinar later on this afternoon. That webinar will take place, if you need to register, you need to go to forex.fxdd.com and click on the link for the registration, and we'll be happy to. There's a banner ad at the top of the page, and just click on that, and you have to put in your email address and your name, and you'll be registered for the webinar. Again, it takes place at 4 p.m. New York time, and we'll see you there. This is Greg Michalowski for FXDD.